Welcome to the Buybox Experts podcast. We bring to light the unique opportunities brands face in today's e-commerce world.
Hi, this is James Thompson from the Buybox Experts podcast. Today's episode is part of a special series of interviews that we have done to dive deeper into the recent phenomenon of private equity companies and FBA aggregators investing in private label brands that are leveraging the Amazon sales channel. As part of this series, we interview a wide range of investors, brokers, consultants, and entrepreneurs that have recently sold their private label brands. We peel back the layers on what's happening in this new investment space and look at how private label brands are finding financial success through the building and eventual sale of their online businesses. For 3 weeks, from mid-February through early March, we will release a new episode every weekday on this topic. Sit back and enjoy today's episode. Hi, I'm James Thompson, one of the hosts of the Buybox Experts podcast. I'm a partner with Buybox Experts and the former business head of the Selling on Amazon team at Amazon, as well as the first account manager for the Fulfillment by Amazon program. I'm the co-author of a couple of books on Amazon, including the recent book, Controlling Your Brand in the Age of Amazon. Today's episode is brought to you by Buybox Experts. Buybox Experts takes ambitious brands and makes them unbeatable. When you hire Buybox Experts, you receive the strategy optimization and marketing performance to succeed on Amazon. Go to buyboxexperts.com to learn more. Before I introduce our guests today, I want to send a big shout out to the team at Disruptive Advertising. For off-Amazon advertising, Disruptive Advertising offers the highest level of service in the digital marketing industry. Focusing on driving traffic, converting traffic, and enterprise analytics, Disruptive helps their clients increase their bottom line month after month. Check out disruptiveadvertising.com to learn more. Today, I'm very pleased to have two guests joining me, Yael Kabili and Mikhail Oran, the co-founders of Fortunet, an e-commerce investment banking firm that helps with the sale of FBA businesses. Yael is an e-commerce attorney helping Amazon sellers with legal issues, including listings and account suspensions, intellectual property enforcement, and e-commerce transactions, while Mikhail is an attorney who has managed and led M&A, joint ventures, and public offerings in the U.S. and in Israel. Yael and Mikhail, thank you both for joining me today on the Buybox Experts podcast.
Thanks for having us.
Thank you.
I want to start with just a clarification on what is the difference between an investment banking firm and an FBA broker? Many of us know FBA brokers, but what is an investment banking firm?
Yeah. So one would say that an investment banker is just a fancy word for broker, but actually it covers much deeper level of service. So we make sure that we accompany our clients, and every investment banker would accompany their clients from the very first step that they do with respect to potential sale of the business and until the very last moment that the deal is closed. The level of services that we provide include the strategic consulting during the process and assistance with everything that comes with the process. And here it depends on each seller's needs. This could be dispute between partners, tax considerations, question about the right timing to sell, a different consideration about how to prepare the business towards the sale, both on the business performance and about the general readiness of the business to handed over to a buyer. As well as advising on other consultants that should accompany the process, such as the right lawyers and tax advisors, etc.
Okay.
And we also, and it also includes accompany the sellers and supervising the whole process. Any steps in the process, we are a part to it. So that's a big difference. Brokering is part of the service. Finding the buyer, negotiating with the buyer is part of the business.
Yes.
We're doing it in a different way, more in the traditional investment banking way. But this is in addition to other services.
So if I'm a private label seller from Amazon and I'm starting to think about selling my business. Why would I go to see your firm versus going to see a traditional FBA broker? You talked about all these other services that you offer, but realistically, if my business is in pretty good shape, I've got, the right kind of documentation in place, my accounting's in good shape, I don't have any owner disputes, why would I use one service versus the other?
Yeah. Please.
First of all, it depends of the size of the business. We, as an investment banking firm that, Michal said, the work and analysis that is done, we focus on mid to large sellers mainly. And when it's not a small business of, 500K, it does require more than just, putting the account on the website and waiting for buyers to come. It requires really understanding the story of the business. We work over a month to analyze it, to prepare the financial side, to prepare a presentation about the business, showing all the advantages of the business, talk about the competitors, the landscape, everything around the business and the story behind it. Because, sending a link to an account doesn't tell the story of the business. It's not just an Amazon account. So that's, I think, the end result of it. And what we hear from buyers is that the materials that we prepare are completely different. Which brings you a higher value and basically, higher multiples, higher valuations, and brings the real value of the business, I believe.
So,
I'm sorry. Just maybe to add to this, another part that I think which is different when you approach guys like us is the experience and proficiency which is related to structuring a deal. So when you negotiate a deal, is not only about price and what is the right multiple, for example, but the multiple over what and what is the structure, and if there is a structure, then how do you build it exactly? And here there are different solutions for each case, and this requires a vast experience in the M&A world, in the mergers and acquisitions deals.
So I hear a lot about the smaller brands, the guys that are selling for $4 to $5, $6 million, trying to sell their business. You're working with considerably larger businesses. Tell me a little bit more about the kind of deal flow you're looking at right now, and the typical size of the firms that you're dealing with.
Yeah, so right now we represent about 18 or 19 businesses, I think.
Okay.
We focus on any business above $1 million. The average is around $5 or $6 million. But we have.
So sorry, that's top line sales or valuation?
Valuations.
Valuation. Okay.
Yeah, and so that's the average. But you see deals of we had a deal in February with a revenue of $30 million. We're now seeing more and more larger businesses. This industry has really changed. I mean, 2 years ago we've seen one type of businesses, and now we're seeing a whole new type of businesses. Everything evolved, and the buyers with the industry.
FBA private label businesses are a hot commodity, no question. What do you believe happened to generate this new interest in acquiring these types of businesses, given that these businesses have been around for years and years and years? There have been private label sellers since the very first days of the Amazon marketplace 20 years ago. What's going on?
So it seems that this is a concept that has proven itself, and you can see the sustainability of those businesses. You can understand today more easily what is the long-term value that they created, the moats that they have built to allow them to enjoy from a competitive advantage for the long term. And the path for additional growth is clear today. I think that in addition, the overall market is extended, with the Amazon penetration, growing penetration into the market and e-commerce in general. Private label are growing as well. And we see more and more such players, which create, we can see a fragmented market with different successful players. That's on one hand, they are very successful. On the other hand, that they do share some level of risk. So buying all these businesses or selling them to buyers seems like a win-win solution, because from the buyer's side, this is a great opportunity for a roll-up.
Yep.
Aggregating different businesses, and then with the right synergies, the creation of higher value. And for the sellers, this is a good opportunity to mitigate risk, to monetize the value that they created, and to sell them today. By the way, risks of a single seller, if he doesn't own the sufficient resources, are to some extent becoming higher due to the entrance of such more sophisticated and larger players into the market. So again, it makes sense, since they are already there, to sell the businesses to them.
A lot of the companies that I've talked to who are in the process of buying these private label brands, one of the things that they see themselves being able to do is typically inject a lot of extra capital to help these companies grow. When you've got these private label sellers, they're bootstrapped, they're paying for the whole thing themselves, but they don't have an extra $1 million to build a business. Even though an extra $1 million would put them over the next hump and allow them to enter new markets or be able to drive down their acquisition cost of production by buying more product at the same time. A lot of these well-funded investors, it's not a big deal if they have to put up an extra $1 million in operating capital. So I'm curious what you're seeing from some of the companies that are buying these firms. Are they giving you any insights into how they expect to extract the value out of these companies?
Yeah, they are looking, when they're looking at an account, they're looking how to expand it, and as you're saying, create value. And it's funny because we're always speaking with sellers, they're saying, for example, should I start selling in Europe maybe before I sell it? I have a year. We're often speaking with the sellers and we start representing them a year before they sell.
Yes.
So they're asking, should I go to Europe? Should I start selling on Walmart? Should I do this and that? And we're reminding them that it's okay not to do everything, because the buyer at the end wants to find, how to expand the business easily. So just by opening Canada, just by opening Europe, by doing several things, they can expand the business by, sometimes 20, 30%, just by doing that. So it's okay not to do everything before you sell the business. But they are, of course, injecting money. What's interesting is that, if you ask most of the sellers, when they reached, I don't know, $4 million, $3 million, if you had, do you want $1 million now so that you could grow the business? Do you want an investment?
Yes.
Many of them would say no. Many of them would say no. They don't necessarily want to grow that fast. They don't necessarily want a new partner in their business. They're okay with bootstrapping. So it's interesting, because even if you gave them the money, some of them would do it, and we're seeing now more and more larger players that are willing to stay and want to stay and want to grow. But a lot of them just want to to sell the business and then do it again. That's the key, and I think this is the main reason of what we're seeing now. Sellers understand, okay, I got to a point where my valuation right now is $5 million. What I bring home every year is not $1 million of profit, really. Yeah. If I bring 200K, that's amazing. They usually use the money to grow. So they're saying, I have the opportunity now to sell a business and get $5 million. and then I can just, do it all over again. Within a year or 2 or 3, I'll just do it again. We're now in the cycle of representing sellers that, sold 3 years ago, and they're now reselling their second business. The second time they're doing it much faster. So there's an interesting, win-win, as Michal said. It's the buyers are waiting for the brands, and the sellers are creating the brands and growing them, and then they're okay to give away their babies.
So what happens in the next 2 years when you've got all this new money coming in? What's going to happen to the way that people today deciding they want to do private label on Amazon? How is the mentality likely to change? How is the market for these businesses likely to change in the next couple of years?
That's a great question, and maybe it relates also to the previous question that you asked with respect to the buyers, what they do with those businesses after they buy them.
Yes.
Which it's all at the end of the day, it is one ecosystem, quite transparent, and everyone looks at everyone's and tries to compete. Mm-hmm. So maybe just to add a few words to what Yael described before on the buyer side and what they do after they buy the business, and then we can look again at new sellers and how this impacts on them. So we see, first of all, we are trying to follow after businesses that we've sold, and whatever we can see through Amazon to try and understand how those businesses are managed by the buyers. This is very interesting, mainly when we're dealing with deals that include some deferred payments that are subject to future performance. Mm-hmm. So overall, we see most of the buyers performing very well on their acquisitions, which of course will need to be measured over time, and because this 2020 was a wonderful year for almost everyone, so it doesn't necessarily represent their level of performance. It is even more important when we look at larger deals that sellers maintain minority rights in the business and keep on accompanying the buyers in the long-term management of the business. So, for example, we are working now on a deal at worth of $20 million, and the seller will remain a partner in the business that he sells and keep on accompanying this business to make sure that the business is really growing, and he will then be compensated in the future for the future achievements. Yep. So in this case, we see that buyers, first of all, make whatever they can in order to keep on expanding the business in Amazon and making those brands real brands, and taking them to other markets and to other channels. They expand them out of Amazon and Shopify. They take them to Walmart. Part of the buyers have their own marketplaces, which were recently launched, and I will not name anyone now. So if we look at tomorrow's new sellers, yes, they will have to take all of this into account. So on one hand, they can be the incubator for new brands for those future buyers. They're like, I heard one of the buyers stating that they see those sellers as their R&D department. So they invest in the development of those new brands. They'll make all the experiments, and when the proof of concept is out there, they can buy the businesses. So I can only guess that we will see more and more new sellers coming into the game with the idea that they will sell the business eventually. Mm-hmm. So they will try to develop the right brand with the right focus, a certain number of SKUs. They will be probably more prepared on the tax structure, which part of them haven't thought about it in advance now, but in the second round they will do, or with the education of the total seller market, they will take it as a serious a serious potential route for their future, which they should consider at the first stage. But eventually, it seems that the Amazon opportunity will keep on bringing on new entrepreneurs, and that they will express their business capabilities through this wonderful platform. This is my guess.
What do you see as, I'm not a private label seller. Neither of you grew up on Amazon as private label sellers. And yet there are people doing all sorts of unusual, strange, wonderful things, building businesses. Quite frankly, some of the things that I've seen sellers doing, I have to scratch my head because it doesn't intuitively make sense. And yet they found a way to make a business and put a moat around their business. And one has to admire the fact that they found these unusual business models. I'm curious what you've seen to date working with Amazon businesses where you've had to step back and say, wow, I didn't see that one coming. That's pretty amazing what they did. Can you share some redacted stories there around unusual things that kind of caught you off guard, and yet somebody has built an impressive business?
We're seeing, so there are many examples. One of them that comes to my mind is that, when we started and got in this industry in 2015, all we saw was, lookalike products, as you call them. Now we're seeing, a lot of sellers, especially the larger one, they start understanding the value of intellectual property. They start understanding that if they build something that's new, that, has not been there, they can own a patent, they can own a design patent, they can own rights, and then remove others and prevent others from taking their ideas. So we're seeing now larger sellers, and it's actually interesting, even those who sold the businesses of 2015, when they're creating a new business now, after they're speaking with us about, the next business will be different. I'll create IP, I'll create something new. So we are seeing, and we've seen several business, sometimes they really blow our mind with interesting products that, nobody has done, and they're really thinking forward. And it's hard to compete with those products. That's maybe one example that comes immediately to my mind.
So I want to add another example, which is super. I find it to be super innovative and very successful and important. So this is a seller that developed 3 brands in the same category at the same time.
Okay.
The 3 of them are actually, each of them is highly successful, and the 3 of them actually dominate this category. This gives him a huge flexibility over the launches of new product, the control even of different price strategy, and other advantages. This is, I think, this is an amazing story. I came from a large corporate a corporate always that manages a brand, a real brand in the real world. Always consider whether you should create a house of brands or one brand that sell to all price points among the different audiences that exist out there in the market. And here, just one person all by himself created 3 brands under the same category, and he's doing just great. So this is a very unique example. We also have an example of 2 sellers they are competitors, and they have understood the power in the combination of both of their businesses. So they have decided to combine forces towards a mutual sale of their business. So this is another out of the box thinking, which I cannot not admire.
Right. Well, I've actually seen certain types of, and I don't, whether it's a broker or a banker, I've seen people in the space approach sellers and say, 3 or 4 of you come together. If we do the right legwork now, we're going to get a higher multiple by simply combining everything. The investor doesn't want to do due diligence 4 times, and they're happy to pay a higher multiple. Do you see that becoming more and more commonplace? Or when I think of so many of these private label sellers, they are an island unto themselves. They're doing their own little thing. Someone's going to pay them $2-3 million. That's life altering for them. And they're happy with that versus who are these random strangers I'm going to start combining my business with? Give me your thoughts on how that works and where you see people going.
So we advised several times on such initiatives, and overall, we think that roll-up is a great idea. I mean, it has a lot of sense in it, and it can bring a huge value. But the success lies in the level of performance and execution of such an idea. And this will make the difference between a successful idea and a failure. It's not just a word, I'm rolling up. You need to be able to create an integration. If you want, like you said, James, to avoid multiple due diligence processes, then you, the sellers, should be the ones who combine their businesses and afford the one process of the due diligence over all of them. It also makes sense to understand the synergies and whether all of them meet certain investment criteria that make sense in investing in all of them together or in buying all of them together. So there is a balance here of complication on one end, and on the other hand, potential to get a higher value for the overall accumulated business. So again, it's a very interesting idea. I think that there is a lot of logic and rationale in making it happen. At the same time, it does include some bet. So I'm not sure if I would go to a very thorough process, which requires a lot of resources, just with the idea to quickly flip all of these businesses together. But when there is a business rationale in gathering all those businesses together, and if the sellers can align their interests and find out the right method of operation for all of them together, then this would make sense, and all of them can enjoy from a greater value.
So we've talked about FBA businesses being sold, an investor buying multiple companies. I'm curious, where do you see these investors? How do you see them actually getting the value out of what they've created? You look at a company like Thrasio, for example, one of the best known aggregators. They have this $1 billion valuation. How are they going to get $1 billion actually out of the business? Are they going to chunk out parts of the business and sell it to bits and pieces here and there? Are they going to go public and become essentially like a mutual fund of brands? How do you get this value out? Because often these investors are buying a bunch of, I hate to use this word, but they're buying a lot of businesses that don't naturally have mutual benefits. In common. Yeah, and so you own a shoe company, and you own a kitchen company, and you own an apparel company. Okay, what am I going to open up? A general merchandise store? I mean, how do you take that and actually realize the value so you can put cash in the bank?
Yeah, so first of all, you put us in trouble, because if I need to provide advice here to Thrasio, then I'm in big trouble. I need to call Josh and Carlos before to get their permission. But
just investors in general.
But as a general idea. So, at the end of the day, business rules remain valid always. So as much as each of such an aggregator is able to create a business that generates growth and a sustainable positive cash flow over time, and they demonstrate their immune towards competition and different challenges, then this would be a great investment and a great opportunity for any new money that is looking for opportunities. And if they do so, then potential exit, if you're talking about what could be their exit strategy, actually, this was your question. It's endless. I mean, so they will be able, as long as they really created a sustainable value to business, they will be able to sell the business to private equities, to strategic investors, to make IPOs, to
Yes.
go public, like any other business. So it all lies with their level of performance and in their ability to take all those brands to the next level and to control and develop them, to control them right and to develop them in the right manner.
One of the things we're all, we're asking ourselves and discussing very often is that, if one of the companies, one of those aggregators, one of the buyers will create some, real IP, real software or something more. We're hearing from a lot of them are talking about AI,
Right.
it became like a buzzword.
Yes.
But it's and at the end you're seeing that a lot of them are just managing the accounts just like the sellers are managing the accounts. So so some of them have some capabilities and especially in the analysis part, but the big question is, will one of them or most of them 5 years from now, will they have other capabilities, something that you can just add another brand and it won't change anything. And also to kind of predict which brand will grow and what exactly to buy at what valuation. There is one public company that is going to that direction, but it's really soon to tell.
I'm curious. All these investors are buying existing companies, and yet I've started to hear that some of them are thinking about, wait a minute, why can't I just build the brands myself? Why do I have to go buy something for X million dollars? Why not bring the talent in-house to know how to start something from scratch? And yes, it'll take me a little bit of time to experiment and figure out how this works, but honestly, there's still an awful lot of products that I'm seeing, an awful lot of companies that I'm seeing being made available for sale where you can literally type into Alibaba and you will find a white label version of exactly the same product where basically somebody has figured out how to go through the process of playing the Amazon game effectively, building a so-called brand, but it's not clear there's really a lot other than consistent cash flow. There's no IP at all. So I'm curious your thoughts on the build versus buy model for some of these investors. Right now it's all about buy. And yet I see some of them starting to ask the questions around, do we build our own stuff from scratch?
Right. So capabilities.
And by the way, I know that's not good for your business, but I see that potentially happening.
I'll tell you what I think. It goes back to capabilities and building a good brand on Amazon is not that easy. And we've seen, companies who just said, yeah, let's just buy a brand and then ask the entrepreneur to just join us and then build brands for us. That's not easy. A seller, people need to understand who are the sellers and what is their mind and how independent they are. And just telling someone who's extremely talented, who's doing $10 million now on Amazon, come, I'll pay you whatever salary that you want, and then just build brands for us. That's not how it works. So first of all, many of these brands still don't have those talents. And they're working on it, and they have great teams. And as they purchase the brands that are already successful, I'm sure their team are going to become as amazing as these entrepreneurs. And also what will happen is that the sellers are, with time, we're seeing them interested in the larger companies, interested in the larger future than just $5 million or $10 million. So it's a process. Just saying I'll ask and I'll publish something and then I'll have amazing talents bringing brands for me. That's not as easy as you think. But I'm sure that with time they can purchase brands, and some of the sellers will join with the right benefits from joining, and we are going to see for sure buyers that are building their own brands in parallel. There's also what Michal mentioned earlier. Even an experienced seller as amazing as he can be or she can be, there is still a certain percentage and success rate. And we're seeing amazing sellers sometimes when they have their second business. We have an example of one of our clients who started the second business, and he said on the first year or two he failed completely, and then he started all over, and then he succeeded. So building a strong brand, finding a right product, it's not just a formula. So
Right.
it is about trying and erring and continuing and growing and then getting to a certain point. So when you buy a brand that's already successful, it's successful already. It's 100% there. When you're starting something, you don't know. And if you're super experienced, maybe it's not 10% success rate, but maybe 90% or 80%. But still, there's a room to failure. So I think this is where it goes, and I'm 100% sure that we'll see some of the buyers developing their own brands. It must be.
Let me ask you, with brands getting ready to sell, talk to me about some of your favorite software tools, consultants, companies that are in this space, helping to get companies to the point that they're actually ready for you to do what you do best.
I think that there's, first of all, they must understand financially where they are. So a lot of the sellers, especially the larger ones, they're using some tools to kind of follow their financials. So, for example, Seller Legend, or Seller Board, or any of these these software. I think they're great to understand where you are, which product is growing, which is not, where you should invest your time, where you shouldn't, and understanding where you are. Besides that, to be ready, you have to understand where you are in the tax area. So before, even a year before you want to sell your business, you have to go to your accountant and discuss the sale and understand, what type of transaction are you going to do and how it's going to work and what will be your taxes, and if there's anything that you should do or change in your. So that's another thing you should do. You should definitely meet with your attorney to get ready for that. Other than these things, what you must do is really focus on the business. The business must be as best as it could, as growing as you can grow it. And here again, we're often asked if what they should do in order to maximize the value. That's one of the most common question. And we always say what you should do to maximize the value is what you do best. If you're best at launching new products or launching new variations, then do that. If you're best at starting in a new market and starting in Europe, or launching in other markets, then do that.
Yes.
If you were an amazing Shopify and you how to build a brand outside of Amazon, then do that. If you don't, then don't. Especially if you're gonna, sell it in a short period of time. So these are the things that you should really do to prepare. Most of the sellers that have good businesses are already doing that. It's just about guiding them through the process, and making sure they're ready in all fronts, so that the day they want to sell it, it's just about preparing the financials, preparing the kind of presentation, marketing deck, and starting the process.
I want to wrap up our conversation with one question about COVID. Certainly in the last 8-9 months, consumers have moved online. Lots of e-commerce growth as a result of people shifting into the e-commerce channel. As we get out of COVID and the world comes back to some new normal, there's questions around what the e-commerce adoption rates will be in a year from now. That's obviously going to have an impact on the type of growth that some of these companies might have in the next year to 2 years. How do you advise companies thinking about selling now versus waiting a year from now? It may impact their ability to continue to show rapid growth over 1, 2, 3 years. How do you think about these issues?
So we actually believe that, first of all, it always should be measured on a case-by-case basis. But in general, we can reflect the common perception of the impact of COVID as the time goes by. So as of today, where we are almost a full year into this adventure, it seems as if the overall market perception is that COVID impacts will stay for the long run, that the changes that have achieved in the different businesses that were managed during this period will maintain the new position also for the long run. So, for example, if there is a business that's sold today, but at the same time obtained additional many reviews, then it is better positioned to keep on and competing for the long term. So it seems that today, except for specific cases when you can really see COVID direct impact on the performance of the business, by the way, positive or negative impact. In all other cases, the performance achieved so far are considered as what is as reflective for the business, and this is the baseline for the valuation of the business.
Yes.
So with this understanding, I mean, in general, as a general rule, and not really referring to any specific business, I would not give any specific recommendation to anyone. Wait, sell very quickly today because maybe you will not grow your business tomorrow, or wait and keep on enjoying from additional growth before you sell the business. I think that this is something that should be examined on a case-by-case basis. So that's in general.
Mikhail, Yael, I want to thank you both for joining us today on the BuyBox Experts podcast. For those of you interested in learning more about Yael and Mikhail's brokerage, please visit www.fortunet.net. That's FORTUNET.net. Thanks, and we'll see you again on the next BuyBox Experts podcast.
Thanks for listening to the BuyBox Experts podcast. Be sure to click subscribe, check us out on the web, and we'll see you next time.